And for more analysis on the U.S. trade tariffs, we're joined by Deborah Elms. She's the head of trade policy at Hinrich Foundation. Now, Deborah, let's start with China. We know that Beijing is saying that it will impose new duties of 10 to 15% on U.S. goods after the U.S. doubled duties on Chinese imports to 20%. How will all of this impact both U.S. and Chinese businesses?
Well, it's a pretty significant escalation in this conflict between the U.S. and China that we've seen under Donald Trump. Just an hour and a half ago, the United States imposed an additional 10% across the board on all products coming in from China and Hong Kong to the United States. And in retaliation, as you noted, China has announced its own retaliatory tariffs to start not until March 10th. So there is still potentially some time for a discussion or at least a potential waiver of some of these tariffs. But the first round of this only a month ago didn't end well. We ended up with 10% tariffs against Chinese goods and retaliation against the United States then. I expect the same thing will probably happen this time.
And how about the other U.S. major trading partners like Mexico or Canada, for example? How are these nations likely to respond to the tariff proposals? Could we see an escalation into a full-scale trade war?
We've already seen that. The Canadians announced that 1 minute after the U.S. tariffs were imposed, 25% on Canada, 25% on Mexico as well. But both of those also went into effect about an hour and a half ago. And 1 minute after the U.S. imposed tariffs on Canada, the Canadians had retaliation into place already. So there's already new tariffs on U.S. goods coming into Canada. And the Canadians have vowed that that will ramp up over the next 21 days to include a much stronger package of retaliation.
Let's look at the impact of all of this on the U.S. itself. Now, is it possible that these retaliatory tariffs from China, the EU, and other trading partners could actually hurt U.S. exports more than its tariffs would help its domestic industries?
I think that's certainly the case, especially if you look at the list that China just put together for retaliation. Almost all of it is aimed at U.S. farm products. And the argument there is that the United States exports a lot of farm products into China and a lot of farm products overall. And if you want to hurt Trump's base, or at least a big part of his base, then going after farm exports is a good way to go. And I think that's what the Chinese have done with this current list of retaliatory tariffs coming on March 10th. There are other countries that are likely to respond in similar ways. Most of these tariff retaliatory actions are very carefully calibrated. They're designed to either hurt specific groups within the United States or groups plus key, especially congressional districts. Whether that sways Trump, though, is an open question. And I think we have to be braced for continuing tariffs out of the United States. And then what the other parties do as a result of that is a little less clear.
And speaking of groups that could be hurt, many U.S. manufacturers rely on these global supply chains. So how would these tariffs affect industries like the automotive, technology, and agriculture industries, which actually depend so much more on important parts and raw materials?
It's a serious problem. I mean, even if you just look at something simple like chickens and eggs, the United States and Canada and Mexico, actually all three of the countries in NAFTA or the USMCA, trade eggs and chickens, slaughtered chickens, packaged chickens, et cetera, back and forth across those three markets, sometimes multiple times in the span of the egg to chicken. So, you know, when you do it not just with chickens, but you also think about all of the interaction in automobiles and much more complicated products, those goods can cross borders, you know, up 8, 10, 12 times over the production cycle. And when you've now slapped 25% tariffs, that industry is going to be really suffering. And in fact, the only CEO that I can recall that has spoken out loudly and publicly against Trump's actions is the CEO of Ford, who pointed out the damage that is going to come to the automobile industry in particular.
Now, Deborah, let's talk about how all of this is going to impact the Southeast Asian region. Could these tariffs actually push China, for example, to deepen trade ties with other partners here in Southeast Asia? And how will it likely impact trade in this region?
I think there's going to be a number of changes ahead. So one is if you're not going to be exporting to the United States, then you need to often unload that inventory somewhere. So I think that this region may need to be braced for the unloading of inventory that was originally designed for the U.S. market. Now, I think that's a short run problem, and then especially Chinese companies will adjust and start manufacturing different kinds of products at different price points to be more attractive to non-American markets. But the other challenge that I think is a problem for Southeast Asia is that in the first Trump administration, there was a lot of enthusiasm for welcoming inbound investment, often out of China, either by Chinese firms or foreign firms in China, to manufacture here in Southeast Asia to then be exported to the United States. I think that's going to get a lot harder to do in this new administration, partly because they're going to impose tariffs against a lot more countries, especially on April 2nd, including a lot more countries here in Southeast Asia on April 2nd. So be prepared for that. But also because this administration, this time around, is much more interested in tracking what they call, inputs or derivative products. And so it may be the case that if there is any content in a final product from China, that will then also have to pay the tariffs that are applied to Chinese products, even if they're coming into and out of someplace like Malaysia or Singapore. And so the complexity and the costs are going to get passed along to this region in ways that I'm not sure we're prepared for, and I'm not sure people are paying attention, at least enough right now to that possibility.
And let's talk a bit about the response to U.S. exports as well. The U.S. dollar has been quite strong against many currencies. But how might we see these tariffs interact with currency fluctuations? Could they unintentionally make U.S. exports less competitive?
I think that is highly likely that we will see currency adjustments and interest rate adjustments and market changes. I mean, these are not small tariffs, and they're not against small trading partners. The United States has attacked its three largest trading partners. And while the U.S. as a whole is less dominant in global trade than it used to be, this is still a very big deal. And so when you're adjusting trade by this much, this quickly, there will be a lot of consequences in other segments and other markets, including, again, currency, interest rate changes, markets in general, et cetera. So this is just the beginning of what is likely to be a very complicated and turbulent period of economic change that, we're going to look back on, I think, and say, wow, I remember when such and such happened, as like today, tariff day, against the North American partners, and then April 2nd against everybody else.
Deborah, we really appreciate your insights. That was Deborah Elms, who is head of trade policy at Hinrich Foundation.